All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me as always is my good friend, Mr. Peter O'Malley. Peter, hello.
Hi, Ciaran. Great to see you.
Great to see you, Peter. I want to talk today, Peter. It's a pretty big day in not just property but finance in Australia with the quarterly inflation figures being released. I'm just going to open up, I guess, with the key message, which is that quarterly inflation fell to a level of 2.8% at today's report, which has come down from 3.8% in the middle of the year. My first and perhaps most important question for you on this topic is what's the implications of this message that inflation has fallen within the target range for the first time in a while?
Ciaran, it fell at the top end of the RBA's target range, which was a win. That was a good thing. But it has not fallen enough to justify a rate cut next Tuesday on Melbourne Cup Day, which is what many mortgage holders in the market were looking for. So they are slowly but surely making ground in the inflation battle, but there are still persistent inflationary risks in the economy, and there's no chance that the RBA will cut next Tuesday, according to the money markets, which have got a 90% weighting towards hold. So when I say inflation in the economy, some things have come down, but services inflation is still running at 5%. Insurance inflation is running at 6.4%. Everybody needs insurance to some degree or other. And this is an interesting one from realestate.com. Council rates are running at 4.9%, the highest rate for council rates since 2014. So not even the local council's doing their bit to help the inflationary fight to date. That doesn't help us here in New South Wales because we've all just re-elected our councils, and it is a surprise that council rates weren't a bigger issue in that campaign.
It sounds to me like property, whilst we're beholden to the interest rate movements, it's been a pretty tough period. There's a couple of aspects of property ownership right there that have seen increases and inflationary pressure continue through this quarter. I guess you've outlined that the RBA is very unlikely to action a cut at the moment. The next question myself and probably our listeners are going to have is, what does this mean for property prices as we go through the next quarter and we move towards Christmas and even into early next year?
Well, look, there's a couple of things, Ciaran. Let's talk about the broader economy at the moment. I think it's really important that prices are not falling. The rate of inflation is falling. That's called disinflation. Prices fall when we hit deflation. So this is why the RBA won't cut, by the way, because if they were to cut interest rates with the inflation rate running at 2.8%, sure enough, the next quarter will be back above 3%.
Yeah.
They need it well and truly inside the target band, if not heading toward the lower end. Now, there are some economists that I was reading today that think that in the December data will show that we have actually hit towards or headed toward a deflationary measure. That's how bad Stephen Koukoulas, for example, otherwise known as the Kook, thinks the economy is running underlying. I don't pretend to know whether that is the truth or not. When we come to property, I think the current interest rate setting for a lot of people is at a restrictive level, where it's slowly but surely sort of working away their runway of safety, if you like. And as we discussed in last week's podcast, the pockets of weakness in the Sydney market seem to be expanding, and the pockets of strength, of which there were many at various stages of this mortgage rate, this interest rate cycle, of which there were many, they seem to be tightening as well. So there's no doubt, I think every agent out there would speak to the market is not as buoyant today as what it was 3 months ago. But then there are the odd property every fourth or fifth sale that achieves a premium price that nobody saw coming. So it's a really, really challenging property market to deal with at the moment because the odd property is outperforming. The auction clearance rate has not cracked 50% since the second weekend in August, to give you an idea on what's happening there.
Okay, so I'm not going to say you avoided the question necessarily, but to in some ways kind of put a bit of merit behind this, you very rightly point out that the current interest rate setting is restrictive, a bit like a slow stranglehold on some people's finances. Do you think that this, like all of these periods where there's anticipation of a potential cut, do you think we're likely to see any increase in stress selling as we get towards the end of the year? Or do you think that people that are stressed are already stressed? They may have already come to market, and now we've just got another period where people are just going to do whatever they can to hold on.
Well, look, stock levels were at unusual seasonal highs this spring. Everybody accepts that and notes that, and that's reflected in the data. What we discussed a couple of months ago when we first saw this trend emerging, is this a sign of mortgage stress, or is this just a seasonal bump in the numbers? And if you see elevated stock levels over the summer, which is a traditional quiet period for listings, then one could begin to conclude that there is some mortgage stress forcing people to market at a time they otherwise wouldn't go out to the marketplace. If these properties and the clearance rate, I don't want to front run our weekly market wrap, but the auction clearance rate across Sydney last week was 41.3% on SQM Research's numbers. So you're talking there a 59% failure rate. If those properties that fail to sell don't manage to sell fairly quickly thereafter, the stock levels do pile up. And I am seeing more and more and experiencing more and more vendors who have gone to market with another agent, not sell, phoning in and saying, what do we do now?
Yeah, and you rightly point out if they do pile up, that adds extra pressure, that if there is then some stress selling over the period, it just amplifies the problem, and we really end up in a tough spot. I wonder, and you briefly touched on this, can we be confident as consumers that this inflationary figure that's been released today, can we be confident that it is a genuine result as opposed to like a trend, as opposed to a spurious kind of one-off, sign that we might be in disinflation, but actually we're going to return to where we expect to be at the December quarter?
Oh no, I think it's a genuine trend because it's so stubborn, and the data that they're picking up is so nuanced. That's why I touched on where services inflation, insurance inflation, and council rates inflation was running. They're across everything. The sophistication of the data that the RBA uses is second to none, and it shows that they were right not to hike any further, and it also shows that they were right not to have cut yet. And like most people, I'd like to see a cut. There's no doubt about that, a cut or three for that matter. But I equally accept that, you just can't have the basic costs, the day-to-day cost of living run away because it'll create far bigger dramas than elevated interest rates.
All right. So you have talked about the factors that interestingly have driven inflation in this period. What are the major drivers of the drop in inflation throughout the quarter? Do you have any insights?
Restrictives. It's just discretionary spending has been soaked up. Coming out of COVID, people had excess savings. That's been soaked up. People are selling off investment properties, second cars, boats, cutting back on fuel, wherever they can cut back. So, making coffee at home rather than going to the local coffee shop, for example. I'm not saying that all people are doing this all the time, but these are all just anecdotal examples of cutbacks which through time float through the economy.
We've talked a lot about rent's contribution to CPI and inflation. Have you seen or had reports of rent stagnating to a certain extent, which may have helped contribute to this drop?
The rate of growth in the rental market has slowed. There's no doubt about that, but it is still well above the inflation rate of 2.8%, yeah. And that comes back to the immigration policy of the day. The government have made big announcements a couple of times that they're going to curb the number of people coming into the country, and they're going to target specifically overseas students. But as we've discussed before on the podcast, if you answer the telephone here at Harris Partners on any given weekday during January, it'll be sure as eggs. It'll be someone phoning from mainland China, and those calls have already started. I picked up the ringing phone here earlier in the week, and it was someone phoning from China trying to rent an apartment over the telephone.
Yeah, I certainly haven't seen a reduction myself when showing them. I guess my final question on this one is probably your least favourite. But if you had to make a prediction based on the inflationary figure, comments from people like, the Kook and other economic commentators you've listened to, any messaging coming from the RBA, when do you think the first rate cut is likely? And do you have any sense, if inflation holds where it is or even gets a little bit better, do you have any sense of how aggressive that cut might be?
Yeah, look, it's a seemingly simple question, but there's so many unknown factors. And the point we made last week about what does a Trump presidency mean if it goes that way, I saw today NAB made this statement through a journalist, or a journalist repeated NAB's statement, which is Trump's desire to have a role in the conduct of monetary policy is possibly consequential and risks a permanent shift to higher inflation. And if you go back to what we discussed last week, and then lo and behold, NAB research is spruiking that today. So I could give you a prediction today based on what I think will happen in the world, and then if Trump does take office, win office on Tuesday, Melbourne Cup Day, probably Wednesday our time before we know the next day, but he won't take office till the January. But then he starts coming out with policies that are wildly inflation, trying to inflame and inflate the American economy. Well, that'll set it off globally. So that's one risk, for example. The answer to your question from HSBC's perspective is that they do not expect any rate cut in the Australian economy before the second quarter of 2025. The CBA thought a rate cut, the RBA would be forced to cut this year, and they've now put that back to February 2025. So all of the big banks are taking a view. The reason the CBA's forecast is always interesting is that they're probably seeing data that's only second to the RBA, being the biggest home lender in the country, and they were emphatic that you'd see a rate cut late this year. So they were clearly seeing something in their model that suggested there would be an inflection point or a breaking point. Not that I like using, I don't want to be melodramatic here and use the word breaking point, but there's clearly a point that households, and I'm not necessarily talking middle-class households in the inner west, but the interest rate setting is a very blunt tool. There is a point where people can't take the pounding anymore with the current interest rate setting. That is the reality of it. And I did see one of the RBA board members say that we must get used to the idea there's a possibility that we have high inflation with weak economic performance. And that's a form of stagflation that we've discussed 12 months ago, where this could go, where the inflation rate is at a level that doesn't justify the RBA cutting, but economic activity is coming off, and that's kind of the worst of both worlds. So there's much to play, there's much to go through. Hopefully the RBA don't drive us to a breaking point as an economy, and they get in front of it and throw in some relief right before we get it, but it's clearly high-stakes poker.
Oh, I think you perfectly highlight the nuance here that, you can't take a single inflationary figure, which is why I asked about trends earlier. You can't take a single comment as being indicative of the current climate because there are so many other factors involved. There are some what-ifs, particularly around the US election, and we may actually enter a period where the RBA have to balance a more favourable interest rate setting in a tough inflationary environment versus, collapse of the housing market or collapse of the economy more broadly, which obviously is a huge, huge problem for the country.
I think the only thing that would cause the RBA to back off on inflation is high unemployment. Yeah. If we've often posed, and not just us, everyone's posed the theoretical question, what would the RBA prioritise, high unemployment or high inflation? In America, it's fair to say that they prioritised jobs over inflation. And again, I think that's one of the major reasons you're seeing the gold price run. And I personally believe a second wave of inflation will come out in America because the Fed's nearly I think the Fed might have gone a little bit early in throwing in the towel there in America. And maybe Australia will hit the same inflection point. This has got this sort of, history doesn't repeat, but it rhymes feel about it. They thought they had inflation beat in the 70s. They backed off, started cutting rates, and then inflation come back with a vengeance. And your grandparents, your parents have no doubt told you about the wicked dark days of 16 to 18% interest rates. I'm not saying we're going to get there again, but that's how it happened. They thought they'd beaten inflation, cut rates, and then it came back with a vengeance not long after.
Yeah, well, I certainly hope that we have learned from the past in terms of, making economic choices that impact the least amount of people in the worst possible way. I'm going to change tack completely then, Peter. Throughout the week, Chris O'Keefe, the Drive host on 2GB, had a section where he talked about his experience trying to buy property in Sydney, and he talked about how throughout his campaign, he'd been to a few open homes and then started getting some cold calls from buyers agents. And he was a little bit perplexed, as he reports, and wanted to do some investigation into how these agents, who he'd never reached out to or spoken to, had gotten his details. I guess firstly, I know that you caught the piece, and I know that this is something we have talked about in the past, but have you yourself experienced any activity in the marketplace where, firstly, in your time, where buyers agents have connected with you and said, hey, we should work together? And secondly, if you have you seen an increase or a shift or some kind of momentum change in that space in recent years that may indicate this is becoming more prevalent? Yeah,
look, personally, I've never had a buyer's agent ask me for the details of buyers, or as what Chris O'Keefe and the real estate trainer Tom Panos alluded to in that news article that you're referring to, where sellers agents or vendors agents are basically handing over open for inspection sheets to buyers agents saying there's a list of prospects. There's some really good buyers in there who are frustrated and need professional guidance. Call them and see if you can, shake anything out of it.
And give me a cut, of course.
Well, that's absolutely that's the end game. But I've been hearing rumours around the industry that it has been happening. I think you've got an experience about it, which was a couple of years ago, if I'm not mistaken.
It'd be just over 2 years ago. I had a buyer's agent reach out and say, look, for X amount of contacts, it might have been 100 leads from an open home. He'd give me a payment and then a bonus kind of, on top if he was able to engage with any of them.
Yeah. And look, I like calling a spade a spade. That's someone that was working at Harris Partners and left.
Correct.
Yep. Thank you at the time for letting us know that is just that particular individual knew how data centric the agency is, what great records we have, and knew what a pipeline that would be. But if we wanted to be buyers agents, we'd call the list ourselves and offer those services, because there's nothing stopping us from being a buyer's agent, and we are a couple of times a year for selected clients who ask us to act on their behalf. So to hand a list of data, internal list of data to an external company is the height of madness. And any agent that's conducting themselves in that fashion, if they get caught, they'll probably get their license revoked, because as we've discussed in the past, the New South Wales Department of Fair Trade are not taking agents to court through the state legislation anymore. They are using the Australian consumer law in the federal court to prosecute real estate agents. And the sooner that message gets through to agents about they need to not only know the agency conduct, but have some understanding of what Australian consumer law is, until they get right across it, there's going to be some very, very high-profile cases. And here you've seen a high-profile individual in Chris O'Keefe relating his own experience, which was pretty wild, really, wasn't it?
Oh, look, it certainly is. We can't forget too that, data collection in real estate is a complex issue, because we collect data. We do so under the Privacy Act. We do so under state regulations, et cetera. There's a whole range of things that we need to think of. And it really does boggle my mind that an agency would be stupid enough to give away data that they don't have the authority to do in this digital age where the Privacy Act is so important. So my question for
That's
you...
That's an instant dismissible point.
Oh,
If no one's ever asked me because I'm the agency principal, and I don't think there's any agency principal, I might be mistaken, that would be stupid enough to do that. But, a salesperson looking to top up on the side hustle might be tempted by that. We must keep in mind, and this is now getting away from your point, sorry, Ciaran, but most real estate offices now, there is not actually a boss or a principal in the agency that's, in control of the place. It's a brand where agents come and license the brand, and they have a desk and they use the infrastructure of the agency, but they're operating under their own company name.
Yeah.
So they feel there's an autonomy there, and I can operate the way I choose. And as you've touched on, yes, we collect a lot of data, but more important than collecting a lot of data as real estate agents, we store a lot of data.
Yeah. And we protect it, importantly.
We should, as an industry,
Yeah.
we should protect it, but clearly, furnishing an external company with a list of data and saying, ring that and have a go and see if you can score yourself a new client and send me a kickback if you do, that's very cavalier.
So I guess the most important question I have for you then, and I would assume what our listeners might be really interested in, is what can people do as buyers to protect themselves from this scenario happening to them? Is there anything they can do?
I don't know if you can protect yourself from someone being so outrageously stupid.
Yeah. Yeah.
That's what that is. That's outrageously stupid for any real estate agent to do what Chris O'Keefe outlined. What you can do as a consumer is report that conduct so that it's looked into. And as we've seen with the wave of complaints about underquoting, if it gets enough of a wave of torrent behind it, it will force the regulators to take a look at it. If you have some sense on how your number was leaked and who from, a Google review would be one of the most immediate actions that you could take if you're certain that's where your number was leaked.
All right, so good advice would be if you've been to, say, 5 open homes with 3 agencies and you're unsure, you could quite reasonably just put in a report to Fair Trading or whoever it might be and say, look, I'm not sure who, but someone here has leaked my details and I'm not happy about it. Can you investigate? Do you think that's reasonable?
Yeah, look, what you could do is you could say to the buyer's agent, bit of skullduggery in return. Oh, thanks for phoning me today. That's really convenient that's really, really convenient that you've reached out because I was thinking about calling a buyer's agent. How did you get my number?
Yeah, okay. Yeah, not a bad idea. Not a bad idea. Let's, I'd assume in some of these cases they may not be the most...
Thanks for phoning, Ciaran. Who told you I was looking for a buyer's agent?
Yeah. Yeah, very simple approach. Before I close up on the topic, I would also say I personally think there's probably a bit of a fine line too with some of the agencies that are using third-party platforms to, make open home experiences easier, for example, because I know some of them, after you get the information, sends you a link. Do you want a mortgage broker? Do you want a buyer's agent? Do you want a this and a this and a this? And I think it's important for consumers to just have a bit of a look through what they are doing when they, after they inspect and they get some info, so they don't find themselves just clicking through on authorities that they don't necessarily realise they are.
That's true, but that is inducement. That's enticement. If you go for it, you go for it. You're you're on your own there. That's the way of that's the way of the world in 2024. Certainly leaking data purposefully with the aim of getting a kickback. That as we've discussed is outrageously stupid.
Well, it certainly is, and hopefully they will get caught up in this wave of litigation that's coming for the industry. As we wrap up tonight then, Peter, you touched on it briefly earlier, spoiling our market wrap reveal, but take us through, if you can, the SQM research numbers for the auction clearance rate this week across Sydney.
So 1,376 auctions were scheduled. There was an auction clearance rate overall of 41.3%. 539 of the 1,376 were re-advertised for private treaty. 188 were rescheduled. 271 sold prior, and 297 sold under the hammer. So under the hammer beat the sold priors this week, which doesn't happen every week. So that's a bit of an anomaly in the trend. But yes, the same weekend last year had an auction clearance rate of 50% on SQM researchers' numbers, so 41.3%. And as I say, it's been stubbornly stuck below 50% since early August. And as we alluded to, if that were to remain stubbornly stuck below 50%, that means that the stock levels are stacking up against each other, that are then competing with incoming listings. And then suddenly you do have a scenario where the most appealing properties, the best priced properties, the best marketed properties are the ones most likely to sell the quickest, and some are hanging around. Not to say there's not good prices in there, and many of the properties that are failing do go on to sell a week or two after. But if you're seeing 539 of 1,376 auctions re-advertised for private treaty before the big day, you do need to ask yourself, do you really want to sign up to an auction at the moment and put a deadline on the sale on day one of the campaign when you have no idea who the buyer is?
Yeah, certainly. And correct me if I'm wrong, but I think since early August, when we've had this pretty persistent sub-50 clearance rate, this is a low, if I'm correct. I think 41.3 is the lowest we have seen.
Fresh low for this cycle, yeah.
Yeah, fresh low. And final question then, do you think it is still driven at the moment just by excess stock on the market throughout this period?
Look, it's hard to say. The inspections that we're doing, there's enough buyers turning up. I have seen, and I remember, I think it was 2008, it probably was the GFC, the auction clearance rate was in the teens one weekend. That's clearly as bad as I've ever seen it.
Yeah, wow.
So what I would say is that there is too much stock on the market, but I think to win listings, this is a big point. To win listings, agents are overquoting still.
Yeah.
And I've lost listings in the last few weeks because it's like, yeah, it's disappointing to miss the listing today, but you are a complaint based on your price expectations, based on what people are telling you, you are a complaint and an unhappy client in 4 weeks. And I missed a listing in July, August. The guy rang in today. He was told 3.3 to 3.5. I said, it's not there. I'm sorry. In all good conscience, I can't say that to you. He rang in today and said, I need your advice. I know you'll tell me straight. The agent's got an offer of 2.7. Should I take it? What should I do?
Wow, that is a big difference.
And I said, there's a rule in poker. If you're not in the hand, you can't speak. And I'm not in the hand.
Wow. It's certainly unfortunate to hear that it is still so prevalent in the marketplace. But
and can we say that the property market has not dropped from 3.2 to 3.5 down to 2.7, just was hoodwinked and trusted the agent knew what they were doing with the pricing strategy.
Yeah, and as we always say, overquote early and then condition down to get the sale. It's unfortunately an all too common, but hopefully disappearing in time tactic across the industry. Look, really great discussions today, Peter. Some really important topics, I think, for our listeners. Certainly going to be an interesting few months as we head towards the end of the year. And I look forward to keeping our listeners updated on what the market movements are.
Indeed. Thanks, Ciaran.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.